Is it a better idea to lease or is it a better idea to finance when buying a new car? That's what we're going to find out. Welcome to Car Help Corner, where we help you, the consumer, master the process of car buying and car ownership. After over 10 years as a consultant helping consumers with their car buying purchases, one of the most common questions that I often get asked is whether it's a better idea to lease or to finance when buying a new car. There are a lot of important things to know about both leasing and financing a new car. So to understand all the benefits and downsides and to figure out which one is the best option for you, then make sure to stick around to the end of this video. One of the most important things that you need to establish when figuring out whether it's a better idea to lease a car or to finance a car is to first establish whether you are a long-term person or a short-term person. A long-term person is someone who buys a car with the intention of keeping it for at least 7 to 8 years, or potentially even longer than that, even until the wheels fall off. A short-term person, on the other hand, is someone who switches their car every few years, either because they just don't like to be in the same car for too long, they don't like to deal with long-term repair costs, or they just like the feeling of having a new car every few years. Now, it's very important to be honest with yourself and know exactly what type of buyer you are, because there's plenty of people who buy a car thinking that they're going to hold on to it for a very long time, only to trade it in a few years down the road and end up losing a lot of money. When you buy a new car only to trade it in a few years down the road, there's a good chance that the value of that car is going to be a lot lower than what you owe on the loan. This is what we call negative equity. And when you trade in a car that has negative equity, you're going to end up owing a lot of money on the new car that you buy. You need to be honest with yourself and determine whether you're the type of person that holds on to their car for a long time, or if you're the type of person that wants to get into a new car after a few years. If you're the type of person that holds on to a car for a long time, then financing definitely makes a lot more sense than leasing, and it could actually be a much cheaper way of buying a car too. The main differences between financing and leasing is that when you finance a car, you're making payments on the total purchase price of the car. And once you finish making your payments, you now own that car. With leasing, however, you're making payments on a portion of the total price of the car, which means that you do get lower payments, but also means that you're left with a buyout amount at the end of a lease. Now, you can either pay for that buyout amount in full if you want to keep the car, or you can just return the car back to the dealership and then start the process all over again. Now, the main reason why financing can actually cost less money than leasing is because you get to keep the same interest rate for the entire price of the car. Let's go through an example to show you exactly what I'm talking about. For this example of financing versus leasing, I've chosen the 2021 Toyota Corolla. Now, the reason I've done that is because at the time of this recording, Toyota was actually offering the exact same low interest rate for both financing and leasing, 0.99%. Now, if we look at the numbers for financing first, we can see that the total price of this car with fees, taxes, everything in is going to be $29,279. Now, that's going to give us a monthly payment of $622.40 over 48 months or 4 years. So if we add up 48 months of payments, that's going to give us a total cost of borrowing of approximately $29,856, which means that we will have paid just about $600 in interest over the period of 4 years, which is not bad. So let's take a look at the lease example now for the exact same car, 48-month lease at the same interest rate of 0.99%, and we also have the same price as well, $25,911 plus tax. That's going to give us the same total after tax. All of that leaves us with a lease payment of $344 a month over 48 months. And if we add up all of those payments, that means the total cost of this lease is going to be $16,512. Now, that's not bad, but let's say you want to keep this car at the end of the lease. Well, if you want to keep the car, you're going to have to pay the buyout amount, which right over here is $12,045. Now, if we add that amount, $12,045, to our total cost of borrowing for the lease, $16,512, that's going to give us a total of $28,557, which sounds pretty reasonable, but you have to understand that with a lease buyout, you cannot finance that balance at the same interest rate of the lease. If you want to finance that $12,000 buyout, you're going to have to go to your own bank or some other lender, which most likely is not going to be able to give you a low interest rate of 0.99%. Now, the important thing to understand here is that you cannot finance your buyout amount at the same low interest rate as your lease. If you want to finance the buyout, you're going to have to go to a bank and get a car loan, which often have much higher interest rates. Let's say the bank is only able to give you an interest rate of 4.99% on the buyout. Well, that's a lot higher than 0.99%. So once you add all the extra interest that you're going to pay on that loan, it would have been cheaper if you just financed the car in the first place. The point here is that if you know that you're going to keep the car at the end of a lease, then it makes sense to just finance the car in the first place, because that way you get to have the same low interest rate throughout the entire price of the loan. Not only does financing a car usually end up costing you less than leasing when you factor in the total cost of borrowing, but holding onto a car for as long as possible is usually the cheapest way of owning a car. If you only keep a car for a short period of time, then your total cost per mile is going to end up being pretty high. But if you hold on to a car for a very long time, for as long as possible, and drive it as much as possible, then your total cost per mile is going to end up being way lower. Not only does financing a car and holding on to it for as long as possible end up costing you less money, but there's a lot of conditions with leasing that you need to be aware of. When you lease a car, you can only drive it a certain amount of mileage per year, and if you go over that mileage limit, you're going to end up paying some pretty heavy penalties depending on how much driving you do. When you lease a car, you also need to make sure that you keep it in really good condition. Otherwise, at the end of the lease, you could end up paying some pretty heavy wear and tear costs when you return that car back to the dealership. And finally, when you lease a car, you have to remember that you're fully committed to that car for the entire lease period. If you decide to break a lease early, it could end up costing you a lot of money. Now, having said all that, there are many cases where leasing can make a lot more sense than financing, especially in the case of short-term people who've decided that they only want to hold on to a car for a few years. Some people just like being able to get into a new car every few years and being able to take advantage of all the latest features and technology that they offer. Leasing can also make a lot of sense for business owners who are able to deduct the lease payments as a business expense. It could end up saving you a lot of money on your income. And sometimes certain cars just have very good lease deals available. If it's a car that has very low interest rates for leasing and other similar lease incentives, or if it's a car that has very high resale value, there's a good chance that you could score some really low lease payments. Leasing also makes a lot of sense for a lot of high-end luxury cars or European cars, which are known to have very expensive repair bills out of warranty and can also drop in value very fast after 4 or 5 years. If you're the type of person who just can't tolerate spending a lot of money on repairs or expensive repair bills down the road, then leasing makes a lot of sense for you. Like I said earlier in the video, deciding whether to finance or lease a car basically comes down to whether you're a long-term person or a short-term person. If you're the type of person that holds on to their car for as long as possible and wants to have the lowest cost of ownership, then financing usually makes the most sense. But if you're the type of person that just wants to get into a new car every few years, not worry about repairs, then leasing might be the better option for you. Let me know what you thought of this video, and if you want to suggest some topics for future videos, just leave a comment below. If you enjoyed this video, make sure to like and subscribe. You can also take a look at these links to my other related car videos, and make sure to follow me on TikTok and Instagram. And if you need any additional car buying advice, recommendations, or help with getting a great deal on your next new car purchase, make sure to check out carhelpcanada.com. Thanks so much for watching, and see you next time.